Welcome to Drill Down Earnings. We've got the latest quarterly results from Rivian, second quarter earnings, if you can call them earnings, because they're losses, because this company loses tons of money. We're going to get into that with the business story behind one stock on the move. The stock is moving. I'm Cory Johnson, Chief Market Strategist for the Futurum Group. So Rivian second quarter earnings, kind of in line with Wall Street estimates, but here's how the business did. Let's really dig into the numbers here. The sales, not terribly important, although they had over $1 billion in sales. But the direction is in the wrong direction. 3% growth on a year-over-year basis. They're doubling down to try to grow this business and build out their factories to make a cheaper car. And beyond this, their margins are miserable. 39%, negative 39% gross margins, which is to say everything they sell, every car they sell costs a lot more to make, let alone all the other overhead that the company has. And their production growth is really stalled, down 31%. On a year-over-year basis. And their capital expenditures as they build out their plant in Normal, Illinois, yes, that's the name of the town, Normal, Illinois, 11% increase in capital expenditures, pushing up near $300 million for the quarter. So when the numbers came out and the company started talking about what they expected, the stock sold off another 7%. That's on top of a 40% loss for the year. Now, the CEO, RJ Scaringe, however, talked about what they're doing they think they're going to be at positive gross margins, not profit margins, but positive gross margins by the end of the year because they're getting better at the things that they do. And yes, a cheaper car they think will help them get there as well, just by pushing more volume through their factory. Here's what RJ Scaringe had to say on the call.
There's, the 20% that we've referenced in cost reduction on the bill of materials for a like-for-like vehicle. That's based upon technical changes we made to the vehicle and supplier negotiations that we drove over the last 18 months. There's certainly more room to go in terms of applying some of the leverage that we're going to see, not only with the relationship we're building with Volkswagen, but also with the scale that comes with R2. And so we do see continued progress as we drive towards the long-term goal of 25% gross margin for our Normal facility. And it's these continued cost efforts that we're talking about here on reducing our bill of materials. We also see improvements happening in our conversion costs at the plant. And those conversion costs are both the continued progress around efficiency improvements within the plant, but also over time, the enhanced fixed cost leverage that's going to come from bringing R2 to production to be produced in Normal as well.
So what's your big takeaway? What's it all mean here? And what's the thing to remember when we see Rivians on the road or think about Rivian as a company or even a stock? I've got one number that really explains a whole lot. Our Drill Down Earnings Bite right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So Rivian's second quarter earnings, here's exactly what you need to know about the quarter. $1.158 billion in sales, 13,790 vehicles delivered in the quarter. But they're losing money on those cars. In fact, they're losing money on every car. And in fact, that's our drill down bite, the one number that tells us a whole lot. Rivian last quarter lost $38,784 for every single vehicle they delivered. $38,784. So when you see those cars on the road, know that they cost so much more than someone paid for them, just in terms of gross material costs. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson. And you can check us out on X at Cory TV, at TikTok and Instagram at Drill Down Pod, and of course all kinds of other earnings information and lots more about technology on the 6.5 Media page on YouTube.